Good morning, afternoon, everybody. Brian Hoops here, Midwest Market Solutions. This is Thursday, January the 12th, and the crop report has just come out. I want to give you our analysis and ideas on it. What we saw in the report here, just one thing that stood out to me was the winter wheat planted acreage numbers. They were 2 million below the average trade guess, 4 million below year ago levels. That is the standout bullish number here, I think, and really should put a floor under this wheat market or the winter wheat. We saw world stocks and world supplies, U.S. stocks and supplies of wheat grow from last month. That's kind of kept a lid on rallies, but if we get some weakness in prices, that should be looked at probably as a buying opportunity. We're going to try and put some spreads on for new crop wheat, trying to bull spread this market. I think once we get into the springtime frame, dryness issues and price may suggest that we tear up even more of this winter wheat, and if we get any type of rally off of weather concerns into the summer, that should be bullish for that market. So that was a standout number. The soybeans are finding strength here today from lower production numbers, lower ending stocks. Quarterly stocks showed probably more usage than expected, and that all has been friendly for the soybean market. We've been trading higher throughout most of the day since we've released the numbers. Now, after we kind of digest this going into the weekend, we're going to start trading South American weather again. So soybeans could easily pull back if the weather remains good. The market, I don't think, is going to enter a bull phase or anything like that because we've got plenty of supplies on hand. But what it tells us is we should have some downside maybe through the month of January if we get good South American weather. Corn market did not have all that bearish of news. These production numbers were large, but not as large as they could have been, and the crop certainly could have grown in size, and it did not. The corn market here is under a couple cents of pressure from quarterly stocks being larger than expected, suggesting that our feed usage was not as strong as previously thought. And that's going to keep this corn market, I think, stuck in this trading range between about 345 and 362, 63 on the upside in the March contract. So we've got some reownership strategies in place in the corn and beans. We're going to hang on to those going into the spring, into the summer. Really, we're getting down to weather. Again, is going to be the saving grace for the American farmer. If he's holding inventory, you're going to have weather issues either out of South America or this spring, summer in the United States. We could have some planting delays north of I-20, and dryness, I think, will continue, into the Kansas, Missouri, Oklahoma area where drought is likely to intensify. Cattle futures been lower all morning here. Cutouts down again. Have a great day. This has been Brian Hoops from Midwest Markets.